Sheriff Daramola, and welcome back to my weekend market analysis series. As we gear up for next week's trading session, this video will be serving as a guide to pinpointing key levels and structures essential for identifying trading opportunities in the gold market after considering the fundamental factors behind the scenes. Reflecting on last week's trading session, gold experienced some notable volatility. The most significant driver came from an unexpected move by the Bank of Japan, which sent shockwaves through global markets with an unexpected rate hike. This surprise adjustment triggered considerable price swings, and of course, gold was not left out of the picture. Looking at our trading setup prior to the beginning of last week trading session, which you can see on your screen right now, we had two important parameters that was supposed to guide our trading decision. One of which was the key level at the 2425, between the 2425 and the 2420. And of course, we also had the support line of that ascending channel sitting exactly above our key level. Monday's market crash led to a substantial sell off in the gold market, dropping to a 2 week low at around the $2,360 area, a hefty 2.5% decline. And by midweek, we saw a recovery with gold regaining its footing, climbing back above our key level to close the week around our key zone amidst renewed safe haven buying. For educational purposes, you can find a detailed breakdown of each of our entry points in the description box below. Looking ahead, I have a strong feeling that gold is likely to stay in demand, bolstered by ongoing tensions in the Middle East and, of course, strong expectations of a Federal Reserve rate cut in the month of September. This backdrop is expected to provide solid support for gold prices. So, in light of this development, what areas are we going to be looking at ahead of the new week for any potential trading opportunities? In this video, as always, together we are going to be dissecting the current market dynamics, taking into account various components, including the technical overview, to identify the major trend, key level for the coming week, and structural patterns to guide our respective trading decisions. But before we begin, please note that this presentation is purely educational and not financial advice. Trading carries risk, so please consult with a financial advisor before making any investment decisions. With the groundwork laid, let's dive right into the business. So, for this session, I'm not going to be deliberating on the daily time frame as the structure we have on the daily time frame has not really changed. It still remains the same with what we have been looking at in the last couple of months. However, if you do want to have an insight into the daily time frame, I would refer you to my previous video where I do have a detailed top-down analysis in that regard. So you can check in the comment section below for that link to have an insight into that. So today's session, our first point of contact today will be on the 4 hours time frame, where I took into consideration the character of market participants in the last 6 to 7 weeks. And if you look at the structure closely, you will see that since the beginning of the month of July, the current market has been very bullish. And in fact, after connecting the series of higher lows, we have a beautiful ascending trend line to work with ahead of the new week. And you know how we use our ascending trend lines, of course. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that support the idea of buying that asset. Now, in addition to that ascending trend line, we have another important structure here, which has been the character of price action since the beginning of the month of July, and that is this robust demand zone within the 2,350 and the $2,365 area. And as you will see, since the month of July began, this area here had continued to serve as a strong support in this market. As you will see, every attempt by sellers to break through the structure has always been met with strong resistance from the buyers. And in fact, due to the market crash on Monday, despite that strong bearish move, look at what happened. Immediately, price tested that area. We saw a sharp rejection, bringing price back into buyer's territory. So these are one of the factors that we are looking at on this chart that is making the path of least resistance for gold continue to look bullish as we prepare for the new week. Now, what are the conditions that buyers is going to continue? And if that is going to be the case, where are we going to be looking out for buying opportunities? But before we go into the details, it's important that we pay attention to upcoming economic events that will be influencing the sentiment in this market next week. And of course, by checking the economic calendar, um, we can identify how upcoming events might affect price action. This will help us spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our position more effectively. Now, based on the asset we are looking at for this week, we are going to be focusing on high impactful event from the United States economic docket. Now, the first high impactful event for the new week will be coming on Tuesday, August 13th, and that is the Producer Price Index. This data here measures the average change over time in the selling prices received by domestic producers, excluding the volatile food and energy sectors. Then on Wednesday, August 14, we are going to be looking forward to another high important event, which is the Consumer Price Index, which is considered to be an inflationary gauge, as the data here measures, or let me say, examines the average change in prices paid by consumers for goods and services in the last 30 days. Then on Thursday, August 15, we are going to be looking at the retail sales data, which is considered to be another key economic indicator that measures the total receipt of retail stores, representing consumer spending, and of course, its impact on market sentiment is considered to be significant as it provides insight into the health of the US economy and consumer confidence, hereby influencing expectations about future economic growth. Then finally on Friday is the publication from the University of Michigan, that is the Consumer Sentiment Index, which gauges the prevailing sentiment and confidence levels among consumers, providing valuable insight into potential shifts in economic conditions. So these are the events we are looking forward to ahead of the new week. And of course, as technical traders, we do understand that the anticipation of this event usually has its own way of influencing the behavioral patterns of market participants, which will reveal itself on the chart as price action. So, talking about price action, let's go right back into the 4 hours time frame where I was talking about the structural details we are looking at. So, my key level for next week is going to be at the 2,425, a level which has been a key determinant of price action in the last 4 to 5 weeks, as you will see here. It was a selling niche at some point, you will see around this area. Then it turned out to be a buying niche here. Then we saw price break down the structure during the mid month of July. And for about a couple of weeks, this area was serving as a strong selling niche before it finally broke out at the end of last month. And since the beginning of this month, you can see how even last week this area was a strong selling niche, and right now price action is back into that particular structure. So you can see how important this level is going to be. And if you remember how we use our key level, as long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying, except for rare cases where we see significant signal or confirmation to buy. Now, in addition to that key level, I'm beginning to see a structural setup here. So if we take into consideration this impulsive move, you will see that price action had transitioned into a reversal pattern in the form of a double bottom structure. And whenever we identify a double bottom structure, the next thing we want to be doing is to mark out the neckline, which we're going to be using to validate it, where the breakout retest of structure will be a good confirmation to go bullish. Right now, price action has broken out of the neckline, of course, is right into the key level area. So, going into the new week, we want to exercise patience and see how the market is going to be reacting to this key level at the 2425. How are we going to see selling pressure resume at the beginning of the week, bringing price below the structure, which could lead into price testing the neckline of that reversal setup or even the ascending trend line to incite an uptrend move. And if we look at the distance between the key level and the neckline, we are looking at a minimum of 250 pips to a maximum of about 350 pips if price goes further down into the ascending trend line. So it's something we are going to be taking into consideration at the beginning of the week if ever price drops below the structure. However, if the price does not do that and instead continues to maintain buy pressure above the key level, then we'll feel comfortable joining the uptrend continuation from here. But trust me, I will be with you in the comment section on Monday morning after monitoring the character of price action around this confluence during the early hours of the new week to give us an update on where I think price is likely going. So at this juncture, I will pause the video here. And of course, if you have found this content useful for your independent trading decision this week, I will be glad if you could hit the thumbs up button. Your support not only means a lot to me, but also helps the video reach more traders who might benefit from the content. Thank you in advance for doing so. If you haven't already, make sure to subscribe to the channel for more insights and updates. By subscribing, you will always stay informed about my latest videos and commentaries, and you will be the first to know when new content drops. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.